right, hey guys, I'm back. We've got our second asset to be reviewed in video here today, and as I will remind you that on Tuesdays we let the Trade Devils University members choose what gets analyzed, and we do a poll every day. So we'll run a poll, let the members choose. And second up here we have the euro to the Aussie dollar. Now, so two things. Just a reminder for all of you crypto traders that have joined us because of your interest in crypto and or are subscribed to the YouTube channel because of your interest in crypto. You know, I want to encourage you to consider working in other assets, and that's why we have ended up combining our YouTube channels. So we used to have one that was just traditional assets. It would be futures, forex, and equities, indexes, that kind of thing. And then we separated with the channel that you are on here now for just crypto. But given the long sustained bear market in crypto, it was a perfect opportunity to start exposing not only members but YouTube subscribers to this methodology and other assets. So, don't get yourself so caught up in one particular asset. If you're a technician, what do you care? What you want is, where's their volatility? Where's money flowing? Money flows where it's treated best. So, to ignore the other assets, I think is, sort of a bit narrow-sighted or narrow-minded and short-sighted. How about I say it that way? So, looking here at the euro dollar to the Aussie. All right, this is a fairly high-volume pair. It's traded regularly. It's essentially you're trading differences in interest rates. That's what moves the FX market. But it's incredibly technical. Now, one thing that I would encourage you, for anyone who has either done some Forex trading or is considering doing some Forex trading or thinking about getting into it, or if you've done it and you haven't been successful, I want to really encourage you to work in the higher time frames. There is so much noise in the smaller time frames because because Forex is hypersensitive to the last report, the last bit of data, the last clue about what the next move is on interest rates. You got to really be careful. You can just get absolutely eaten alive on the smaller time frames. Where the money is made in foreign exchange is getting behind one of these trends, because the market trends. These are extended periods of time where the market is moving in one direction. That's what we're looking for. Of course, we're looking for trending markets. Now, you could make the case that if you're a crypto trader that there's been one hell of a nice bear trend for the last, since the beginning of the year. But the difference being that it's just much more difficult to go short in crypto. It's kind of a pain in the ass. So when you have the market, in this relentless bear market, even though we may have signs of that starting to turn around, maybe. When you're trading in Forex or futures, it's just as easy to go short as long. It's infinitely easier to trade. Now, that doesn't mean it's easier to make money. It's never easy to make money. This is always going to be challenging and difficult to make money because it's just you wouldn't, as I said in the last video, you wouldn't want this to be easy. It's not supposed to be easy, but it is doable. And profitability is very achievable if you know what you're doing. And that takes time and a lot of practice, a lot of screen time, and discipline. The discipline that I talk about here all the time, to do the same thing the same way every single time. Now, that sounds like it'd be easy to do. It sounds easy, but I'm just... I have an entire business built around people that struggle because they can't find one thing that they stick with. So my broader point here is that everything that I've shown you in crypto is exactly the same on every other asset class. It doesn't matter. It doesn't matter. A chart is a chart. It will do the exact same thing until it doesn't. Right now, there's no evidence that this is changing. So, if you want to know how to do this, pay attention. All right, so here we go. So I'm looking at the euro to the Aussie on the daily chart, right? So if you're trading FX, I strongly recommend that you always start your analysis on the daily. I would encourage you not to go below the 60-minute for anything that you're trading. Maybe you're fine-tuning a wave count, you're digging in to get a count qualified and defined. You might be down at the 15-minute, but I would not suggest trading there. You will just get eaten alive by the volatility and the stop running and the games that get played in there. Trust me on this. I've been at this a long time. Try and stay minimum at the 60-minute. So start your analysis on the daily. So here on the daily, just a great example. So, right, we can see here, so what's our low here? This is February of 2017. We put in this low down here, 2017. So that entire time up until March of 18. Right? So we have that's a 1-year trend. Right? That's now to stay through that all the way through all those retracements, very difficult to do. I understand that. I did not stay with this all the way through. Yeah, I want to make the point here that if you can get yourself positioned into one of these trends, they do sustain. So this is just absolutely a smorgasbord of this technique that I'm teaching you. It's just absolutely perfect. Now, it's not always there. If you were looking at some exotic, cross spread, you may not find it this technically, but with all of the majors, nothing here should be surprising. It certainly doesn't surprise me. So looking at it here, so even here on the daily, we can dig out all of this wave structure here just beautifully. So you can see it's starting down here from this low. We get a nice 5-wave motive wave. It is impulsive. We don't get an overlap of the 4 to the 1. So we get a nice little impulse to give us our 1. Boom, down for the 2. And if I'm not mistaken, that was, well, we had some technical trading into the low and then coming out of the low. I happen to spot this. Whereas from this last swing high to this, so here's the 50, reaction at the target, spikes up to the 38, which happened to be the point of control. Back down, they get target, right? So algos got paid on the way down. So here was the first one. So from that 50 there to the tick, they get paid. There's the reaction. Then it comes back down and they get the second target, right? So clear signs, trust me, the algos are all over the foreign exchange market. So that continues to go, and then we get this one here. So swing low to the new low here to the 50, and then we get it damn near to the tick, right? So then if you were to continue with that from that low, well, here we've broken the 65, so now that's where you know that we've had a trend change. So looking at that from that low, whether you were in that low or not, you certainly had an opportunity here from this low, if I'm not mistaken. All right, that was right to the 50. So we get 5 coming up. So if you were on the short side, the fact that we have 5 coming up, that reduces the probability that this was corrective. Now, it could have been A, B, and C of a larger correction heading down. But given this impulse here, that we can really establish that the trend has changed. So here's my 2, right to the 50, right where we're expecting it, between the 50 and the 618. Target 1, boom. Target 2, through. I mean, that's a hell of a rip right there. So we're getting. So why do I qualify it that way? Well, if I just take my traditional same thing every time. So from my wave 1 to my wave 2 low. Well, here's the 100% that qualifies it as a third wave. Now it's longer than the first wave. Here's the high probability zone. Excuse me, right here. Sorry, right there. We get a little bit through it, right? We almost get to the 200, but this looks like, given this price action here, it looks very impulsive. So pretty straightforward to establish that as my third. Then given that, look at this just textbook ABC that we get coming down. So your first question is it technical? All right, so I'm pulling from my 2 low to my 3 high. Get it right on there. Is that technical? Well, that's your daily chart, right? To the 618 to the tick. And we don't overlap the 1. So I've got a 1, 2, 3. Now that's deep for a 4. No doubt about it. That's deep for a 4. But not only what's interesting here is that we get this depth for a 4. We don't overlap the 1. We go to the 618 to the tick. Here's the algo target. Now they've gotten 2 and through the second target. But damn it, hang on a second. Clear my throat. Sorry, guys, I don't have a mute button on that, as I've mentioned before. All right, so back with my throat cleared. Okay, so here we go. So we got 1, 2, there's my 3. Now, given that we start to go into an extension, as this starts to move higher, it makes me want to check from the all the way. So if I go to my swing low to my third here, you see that's 50 to the tick. All right, so look at this confluence here. From swing low to the third high, which is always worth checking here. We get 50 to the tick. Here's the reaction at the first target. Here's the couple of tick front run on the second target where we go into this nice 8BC. So look at this confluence here. So if I take it from my 2 to my 3, if I can get it right on there. Okay, 2 to the 3. Look at this perfect overlap here. That is... Well, that's a trade you got to take, guys. So you've got a perfect overlap between the 50 and the 618. They are literally sitting there. You got to buy that, guys. That is a must buy. That is no hesitation. You buy that, right? If you see it, right? Now you had to be tracking this and checking the daily. Here's the A coming to the so look at the confluence here. So the A comes to this little pocket here where we've got damn near perfect confluence between the 38 and the first 50. Then we come down, we get perfect confluence at the 50 from the swing low to the 3 high. So that is an absolute must buy. And that's something I would trade heavily, right? So where's your stop? Sitting around at the 65. Easy trade, very low risk. Look at that reward. And that's zero hesitation. If you see it, don't even just pull the trigger. Oh, all right. So let's just carry on here so we can get over to the hard right edge. So I get this 1, 2, 3, 4. Now it looks like, given this, it looks like that might have been my top here. So, but it looks I've now got an extension in the 5th. So here well, let's see, I should change that color up here. Let's get this one, let's get that in white. We'll go to white there. All right, so you can see that. So you can see the waves within the waves. All right, so there I get a 5 of a 5 of a 5 of a 1 wave at the highest degree. Let's take that too. Here, we'll put that brighter so we can see it. Okay, so here's my big 1. So I've got 1, 2, 3, unbelievably technical pivot here. Then we go yet again into another 5. So leaving, the only conclusion here is that I've got my because of that third being so good in this technical pivot down here. So I've got a 3, just a beautiful ABC right out of your Elliott textbook into a perfect confluence here for the 4, and then we rip into another 5. So I've got an extension in the 5th, and then I've just got spectacular subdivision here in this 5th. So look at this, working from that very technical low. Well, I get my nice clear 5 into my 1. I get slight overlap here, so I've got a leading diagonal into my 1 wave, down for my 2. Then I get yet again another diagonal giving me another 1 wave here of a degree higher. So 1, 2. Then we go into another 1, 2, right? It looks like I get 1, 2, 3. It qualifies. I had to go back through and check all of these. So from that 1 to that 2, right? We get to the 3, 4, up to the 5, right? It looks like, if I can get this into it. So there's my 1s completing. There's my 2. 3, 4, 5 completes the 3rd. We're in the 5th now because here's my 4 of the larger degree. So I've got 1, 2, 3, 4. Now, slight overlap here of the 3 to the 4, of the 4 to the 1. So you're thinking, wait a minute. I thought I can't have an overlap. Well, keep in mind where we are. We're in the 5th. Right, so in the 5th, what's defining the 5th is in green here. So the 5th from this low starts here. 1, 2, 3, 4. I overlap here, meaning what I have now is some sort of a diagonal. Now in FX, it's a little bit of a judgment call. So you gotta, purists are gonna bicker with me over this, but in FX, because of the volatility, you can get these slight spikes beyond the pivot, and it will sustain its impulsive structure. So this really a judgment call. So what else would I look at there? So from the 2 to the 3, so we get right to golden zone. So that's where, this is a little nuance here. The Elliott purist is not going to like that. I look at that and say, all they did was, here's what they did. They ran the stops at the 618, just enough to get people stopped out before they took it up. So it goes into the golden zone. There's the Vegas wave right there for support. So it looks to me like all they did was a little stop run, which you get used to that in FX. So a little stop run on the 618. So if you didn't know to not put your stop just on the other side of the 618, which is commonly done, most novice traders will do that. They'll put it just on the other side of the 618. That's the stop run. They don't know to put it on the 65, under the 65. Right? So they're sitting there and they're like, oh, God. I knew that thing was going higher, and I had my stop just into the 618. I got stopped out, and then it went. Market, so dumb, so rigged. Like, can you hear it? I hear it all the time. Right? So you have to know that that's there. So, you know, that it's just a judgment call. So I would allow for that myself. Right? Just having done this a long time, I know what happened there. So then the reason that I'm allowing for that is because after the fact here, what I get is not a traditional a diagonal structure. I'm not getting 3s. I'm getting 5s, and I had 5s going up. So I'm going to allow for that little overlap, right? Purists, yeah, I hear you, right? So but I get 5 going up. Right, and it's technical. So let me pull and let me get this off here. So we've got the algo target from this golden zone. So from the 2 to the 4, let's check it. So if that's my 2, that's my 3. Here's 50 to the tick. Right? Do you see it? And what do we do? From the 50 to the tick on the daily chart to the algo target, and that's the top. Right? So that's why I allow for that little overlap, because I know what happened there. Right? Or what most likely happened there. Do we ever really know? But I can tell you what most likely happened there. So given the structure that's maintained, given that 3 into that perfect 4, perfect to the tick, then to the algo target, damn near to the tick, then we come up, tap it yet again, and then there's the reaction. So what does that mean? Well, it means that I've got a completed 5-wave structure, and I've had this very nice extension in the 5th. So I'm complete now. I've got a fully realized, fully complete 5-wave structure giving me a 1 high. So so you see the 0 down here. So from my swing low to my 5-wave structure high, all I've done is put in a 5-wave structure with an extension in the 5th. Well, what are we looking for next? Well, if that's a 1, we're looking for a 2. Where's my 2? I'm pulling from my swing low to my swing high. Well, we've done this nice, look how pretty is that ABC. But we've only gone to the 38. That's lower probability than here for the second at the 50. So I would not be a buyer here myself, even though that could be. It's possible here that the market is so strong that what we're going to see here is just a shallow ABC, a shallow 2. I think that's less likely. So it could be that we're doing this. It's possible. Let me change that. Oh, we'll go back to white, and let's go back to something more reasonable here. So that's possible that we've done that, and this is the 1-2 going in, right? It's a small percentage, but 12% of wave 2s will only retrace. It doesn't even get to the 38. What I think is more likely, and why I wouldn't have been a buyer there, is because I think more likely we've got to get down to the 50. So this looks like it could be just the subdivision going in of an ABC of a larger degree. So let me take that up. So make this case here. Let's get. There you go. Okay, so this could just be the ABC of the A wave. Very common for an A wave to get to the 38. Also common for it to go back to the prior range of the 3-4 of the prior degree. So ABC potentially now, A, B. Now let's check it. So what are we expecting here? If we're going from the top to the bottom here, we know it can be anywhere from the 50 to the 786. Well, we've had this very, very slight break of the 65 here, which doesn't affect our analysis here as a B wave. That certainly could be a B wave there, right? But it could be between the 618 and the 786. That's certainly common for a B wave. The B wave is a push to get to new highs that fails. So if that's coming back down, well, we get a little zone down here. So I've got this algo target down here, and I've got this 50 down here. Now that's a pretty wide zone. That's pretty good sized zone here. So potentially now you could have a front run on that because of the reaction that you may see here at the algo target. Now take note here, we're back again within the prior 3-4. Right, so from 3-4 to 3-4, right, coming back into that zone here. So here's potentially your buy zone here. So if we came down here, look at the volume profile here. So market acceptance, a lot of trading volume, a lot of buying and selling there. So that's potentially something to consider. So if I were looking at this, we came down here. So what would I need to see to take that trade? If we're coming down there, I'd want to see this good subdivision. Right, I'd want to see something like that. So if we got into that zone there, that thing is sticky. So if we come down in 5 and we're right here, and I've got maybe some divergence in the momentum or the oscillators giving me some tells that perhaps my 2 is in, given the ABC. All right, if I can get some of that, then I might take a smaller position there, knowing that it could continue to the 50 because that's my high probability zone. In fact, my high probability zone is right here. Right, now again, that's a pretty wide range, so that's too much range, that given I'm on a daily chart here. That's too much risk for the average trader here. So we can't sustain that like an algo could, or an institution that can just buy there and not care. They don't care. They'll just buy it there, and they continue to buy it to right here. All right, they get stopped out, then they'll just flip, right, as I've shown you many, many times. So for us, we've got to go down to a smaller time frame because that's too much risk for the average trader. Right, so something to keep in mind. But this will be interesting to watch if this starts to roll over again. Now, of course, given that, we can do a few things to try and help identify where that pivot's going to be. We know just from probabilities that it's likely to get to the 50. So coming down, though, I certainly have got a pitchfork here that I can throw on it. So do we get there here? This would be perfect. Right, that would be the target I'd be looking for. So we have a potential corner pocket there. Right? If that pivot holds, 80% probability of making the median line. 80%. Best odds in trading. Is it there? Is it there? Is it here? Are we going to go? We could go right through it, go right down to the lower parallel. But this, 80%. Right? If that holds. So where's your stop? Just on the other side of that pivot. Because if this thing's going to go higher, get this all up. If we're going to go higher, that wouldn't change the probabilities. Let's say it went up here and did that. So you took that trade, market turned around, you get stopped out. Well, you've got a very small loser because your stop is right above the pivot. So if it goes higher, now that doesn't change if it's, so let's say we go up here and it starts to sell off from there, right? And we're doing our 3, 4, 5, something like that. Yep. Right, now that's still, we go back here. This is still a corner pocket trade. Right, first one, you got stopped out. Now this one, if that pivot holds, it's still 80% probability. Do you follow me here? Still 80% that we get to the median line. Now, do we get here, here, here? You don't know. But at some, because the benefit of median lines is that they're leading indicators. It's telling you where the market is likely to go in the future. Right, that's what's one of the unique things about median lines, and why I want to continue to encourage you to use them. It's a leading indicator, and it's got this time component here. Now, if this holds, right, now we're back to if that holds. Right, so let's put the numbers on it. So if we were going short here, remember in foreign exchange, just as easy to be short as long. So if I were short here, right, let's get our stop just on the other side of it, right there, and let's say we're going to get to the 50. 8 to 1, 8.2 to 1. Boy, that's a trade you got to really think about. That's pretty good odds right there. So I've got 80% probability that let's get rid of that. 80% probability. Now let's say I only get the median line here. Well, oh, you disappointed? That's 5 to 1. All right, if it goes through, if it bounces there, we get to the 50. Now you're at 8 to 1. But don't be surprised if you get a reaction here. But what that might be setting up is something like this. So if we're coming down, if I can get this hot. So if we're coming down here, we get the median line. That's likely just setting up the reaction to the outer parallel before you go down again, before you do, right? Something like that, right? So you're always looking for where that 5 is. We don't know how the median line plays into that. It might do that, right? So maybe the 2 is going deeper, right? Nothing says it has to stop at the 50. Right, but that would be a reasonable first target so you looking for a partial. So if you hit the median line, get a reaction, that's a good place to take a partial. Now you could have locked in some profit with your stop by moving your stop. At the very least, move it to break even. Right now you've got some running, so if you get part of your position, you take some profit here. Never a problem taking a profit. Take some profit, but you can let a runner and potentially here, if that's technical, let's just assume that we get that. So if I go from here to here, well, what's that? That's the 50. You going to sell that? I hope so. I hope so. I hope you're going to sell that 50 as it intersects with the upper parallel, because now you've got yet again this probability of getting to the median line. Right, so it's just if say you took a partial here and now you're giving back profit, you're like, damn man, I should have taken all of it. Well, you got to know that 50's there, because that's a place for you to reload. Now you've locked. Let's say your stop's at break even. Right, so worst case is you've taken some profit. If you're going to get stopped out here, the whole trade's probably a scratch. If you were to sell it here and then get stopped out here, where at your break-even stop, well, you took a slight loser on. So if this goes up and gets you, you've taken a slight loser there, but you had the winner here, so you're probably slightly positive. But you're disappointed because you were looking for the turn at the 50 to come down. Well, that's trading. Disappointment, get used to it. It happens all the time, right? But it can't shake you out of your trading plan. It's, okay, what's the next trade? What did the algos do last? What's the Elliott count? Where's the likely probability zone for the next retracement? Same questions, always the same. That's the benefit of this, right? Same thing. I don't care if it's FX. I don't care if it's a 1-minute chart of the Dow. I don't care if it's Apple. I don't care if it's some exotic spread. I don't care. Name your crypto. It's always the same. You have to analyze it the same way. Otherwise, you might as well just flip a coin. Heads I buy, tails I sell. All right, guys, give us a follow over on Twitter. We're doing a lot there with our followers over there, and a lot of days we'll let you guys pick the coin or the just coin. We'll let you pick the asset that gets analyzed, whether it's traditional or crypto. Right? We still love crypto. I just want to broaden your horizons a little bit and show you that this is equally applicable to any asset. Right? Forex, I love Forex. Traded Forex for a very, very long time. And we're going to start showing you some more and more things that you can do with Forex, and we're starting a whole new training working with MetaTrader 4. So look for some of that stuff to appear in this feed in the near term, in the near future. And you can always find more about our membership and what we can offer to you at our website. That's Trade Devils with an S, tradedevils.com. And I think also on the Twitter feed, if you're interested in just maybe sampling what we're doing, we've got a public Discord that'll let you sample a few of the channels and kind of get a feel for what's going on in there. All right, guys. So with that, I will call it a day. We will probably not do a video tomorrow on the 4th of July, but we'll be back the day after. All right, guys. Have a good one.